Hey everybody, Dave Putz here from JKP Holdings. Sorry for the delay, a little technical issues. Alongside me as always, Mr. Nathan Turner. How
Good
are you,
day.
man?
I'm doing well.
We've talked to you a
Melting.
couple times this week.
Yeah.
Yeah. So, things are going crazy. It's been fun, but I think things are turning around for the space. We saw a large tape recently and a bunch of assets coming through.
Yeah.
And we had some good questions. We actually met last night with a group of people, and there was some interesting conversation about how people are moving forward, what they're doing, how they're doing it, and different strategies of bidding and whatnot,
Yeah.
and getting these assets.
Yeah.
For me, it's just understanding how to adjust yourself without putting yourself in a bad spot.
Yeah. That's
So,
it. And learning how to see the data in a way that you can analyze it and you're not missing anything.
yeah,
And you're taking into account all the different possible scenarios and that kind of thing. So
absolutely,
there's a lot that goes into it, but it's fun.
absolutely. So with that said, how are things been with you? And you've put some offers in as well as we have. Has anything been successful for you recently?
There was that large tape that you and I looked at last week and this week. I haven't heard anything back on that.
Not yet.
Maybe that's good news. I don't know. In the meantime, I was able to go into contract on a single note
Okay.
just this week, so that's great. I'm actually
Cool.
funding on that today, and we'll get moving on that. So
Yeah.
it's always something, always something.
So it's interesting you say that. We've sold some assets recently. Some private sellers have been sending some stuff, and we're due diligence on about 6, 7 assets that we got accepted offers on. So we're moving forward with it.
Yeah,
For me, it's, I don't want to. We see a lot of people say, "Oh, I want all these assets. I want to run successful assets. I don't want to run poor assets." Right? That's a headache we have.
well, and that's the thing is, and you at a certain point you have to kind of weigh the positives and negatives, because is a lower return better than zero? Probably. But at the same time, do you want to take on a headache loan that's just going to be problems all the way through? And so
Yeah.
you got to kind of weigh that out and see what's going to make most sense for you.
And one of the members in our community last night talked about, what is it worth it to be, all his pricing is frustrating and arguing and whatnot. But at the same time, we struggle with people who sellers want what they want when they want it. And the
Right.
problem is, someone made a comment last night that they couldn't believe that, sellers don't put pricing on things. And it's frustrating. But
Yeah.
I think it's not the old days. We used to get a lot of pricing. We
Yeah.
don't get as much we used to.
No, and I see it from the seller's point of view. Definitely, is why would I put a price on that when it's in the eye of the beholder? If you've got somebody who's fresh out of some kind of a training, they're probably going to price it higher than somebody who's more experienced. And so it just economically,
Yeah.
it makes more sense for the seller to
Yeah.
just accept bids.
Because a lot of times they're in a spot where it's a better opportunity for them to actually sell it. Because you're right, people are ecstatic about the fact that they can win an asset.
Yeah.
And they want to get started, jump in. So
Yeah.
are those bad assets out there? I don't think there are. I think there's a
No.
lot of good assets out there. It's just making sure you price them accordingly. And right now it's a seller's market. It's like
Yeah.
saying, well, who's out there buying rentals like crazy right now? Who's buying houses like crazy right now?
Yeah.
And most people say, well, that doesn't really work well for you. And most people say in 05, 06, 07, sitting on the sideline was probably the best strategy you could have had.
Yeah. Yeah.
So
So it's,
inactivity, I don't agree with being bad activity. It's strategic.
it is strategic. And then again, you got to weigh those options, because, we've talked about this so many times in the past, is this is very much relationship based. So to me, it's worth it to buy something, expecting a bit of a lower return that I'm accustomed to. But something's better than nothing.
Mm-hmm.
And B, I keep that relationship with the seller alive.
Yes.
And it's momentum, and they know when they've got something, even if it's just a one-off or they're only selling one note, they'll call me before they call somebody else because they know I'm still purchasing, and we just bought something, within the last few weeks.
Yeah. And I think for me, yeah, as long as you justify it, that's all that matters.
Yeah.
Yeah.
And it has to make sense for both
Yeah.
sides. Yeah.
So I think it's frustrating because a lot of people think, well, it's why not? Why not? Why can't we do something? Well, you have to justify what you did or didn't do to sellers.
Yeah,
right?
that's right. That's right. So this note that I just am closing on today just so happens.
Hey, fellow note investor. Are you looking to learn the basics of note investing so you can get started? However, you don't want to spend a few hundreds or thousands of dollars and hours online on some training program? Have you thought about attending a notes conference? However, you don't want to spend the money or the time away from your family. Well, we have a tremendous beginners video series of 20 different topics, with each video being less than 15 minutes. This means each video is less fluff and direct to the content. Visit www.jkpholdings.com/beginner-series to learn more. Again, www.jkpholdings.com/beginner-series.
It fits perfectly with our guest today because it's an investor that I have that's using their IRA funds.
Yep.
And this is a low priced asset. I'm only paying $16,500 for it. I don't have the rest of the numbers in front of me, but it's a relatively low purchase price. We're expecting actually a quick turnaround on this. Their judgment's already passed. We're just waiting for a date for foreclosure. So I expect it to get paid off or to auction off at foreclosure auction. So this one's probably going to be a pretty quick turnaround in somebody's IRA. The IRR on this one is going to be ridiculous.
So for those who are not familiar with it, right? We talked to people last night that funding is a struggle for them. Finding money is a struggle for them.
Mm-hmm.
And they don't feel comfortable talking to just anybody. What they don't realize is they actually may have some money already.
Yeah. Yeah.
And
Most
what does
people
that mean?
do. Yeah. Most people do. They've got something that they didn't even know they had.
It's something that they say, I think, 4 or 5% of Americans knows about.
Wow. That's crazy.
And if you think that way, why not make it available to those who don't know about it, but just struggle with it? So retire money is something that people are very careful with, but they also like to have some kind of control, some understanding of it, because the stock market's just nuts. So.
And it's nice if you get some education, if you understand something about whether it's notes or anything else, but figure out some kind of investment, because you can make a whole lot better than a bond at 2%. You can do much, much, much better.
Yeah. So without further ado, we have Carmen here from Main Trust. So Carmen, I want you, before we get too crazy, what is IRA? What is this whole idea of vehicle of investing with retirement money? And is it legal?
Absolutely. So the IRS started tax accounts, retirement accounts, clear back in the early 70s. Originally the purpose was more geared towards CDs and small things, but as it's developed, we've gotten more experienced with alternative investments. And so that's one of the things that Mainstar specializes in, is allowing those types of alternative investments. We've been doing it since 1978. So we have quite a bit of experience with it, where you can use your IRA proceeds. If you have 401k that you've rolled over or intend to, that opens up a whole nother bucket of money that people don't realize that they can use to, venture, joint venture, and pool together with their personal money or a spouse's account. So yeah, we totally do that. It's legal. There are some restrictions to that. We can get into the nitty gritty of that as we go.
Okay. So for those who are not familiar with this whole idea, how do you get an IRA started? What are the strategies of getting IRA started?
So there's a couple ways you can fund your IRA. Most commonly, people are, at becoming retirement age, and they've got a 401k that they're looking at doing something with. They can transfer over their 401k, or if you already have an IRA established, you can transfer that money or make additional contributions. So you can make $6,000 contributions unless you're making catch-up contributions over that age 50. So even though it's not a significant amount every year that you can contribute, that retirement income that you have from prior employment, you can pull that all together, like I said, and it can make a pretty healthy little account that you can use for investments, for real estate, notes, and things like that.
So can you transfer, say you work a regular 9-to-5 job, you've got a 401k as part of your employment package. Can you just roll that over into an IRA?
No, you can't. Once you sever employment with that company, then that opens that up and you can transfer that into an IRA. But as you're still employed there, it stays in that 401k.
Okay, but if I worked somewhere for 5 or 10 years and then I changed jobs, but I still have my old 401k, that one I can transfer over?
Absolutely.
Very interesting. And then what's the difference between an IRA and a self-directed IRA? We hear a lot about that.
So they're all self-directed in reality.
Okay.
We, Mainstar, and any other custodian that you're going to be involved with, we don't make investment decisions on your behalf. We don't do any type of tax or legal advice. So that's where that self-direction is involved. You decide what investments you want to purchase. Mainstar, we don't do any due diligence on those investments. So that's where that self-direction comes from. If you want to take money out of your account, you direct us to take money out of the account. If you want to contribute it in, you're directing us to do that. And that's really the focus of that self-direction. Now, you can have different types of accounts as a self-directed account. So you can have a traditional IRA or a Roth IRA. There's a slew of different kinds, employer plans that are available as well.
Interesting. And, one of the things with IRA investing is, you're right, all IRA investing is self-directed. Either you're doing it in a mutual fund or you're picking your situation or you're picking stocks, right? I think the mythology out there is that all you can do with your retirement money is put into mutual funds and the stock market. What else can you invest in? And for those people who are new, we know that you probably know this stuff, but there's a lot of people who are on this call or listen in on the YouTube channel later on that may not know. I can invest in other things in stock market?
Yes, absolutely. So really, you can invest in nearly anything. There are a few restrictions that the IRS applies. You cannot invest in life insurance. You cannot invest in collectibles. Or some special metals. For example, you can't have a wine collection in your IRA. But really, other than that, if it's something you can take title to, for example, real estate or a promissory note, where you are the on the note, it's drafted in the IRA's name. Partnerships, you can hold a partnership. So really, anything that you can take ownership, or the IRA would take ownership to. We have a slew of things you can invest in. It's not necessarily limited. We do have some people, choose to form limited liability companies, and then they, in that limited liability company, will go on and do the investments in the limited liability company. So there's a lot of flexibility with it. We obviously have investors that aren't comfortable doing that more advanced type stuff. So they still might invest in those CDs or mutual funds and bonds. And we do all that as well. So it really just depends on how savvy you want to be. And obviously there's more risk involved with some of that other investing.
Cool.
So you don't necessarily have a list that you can point somebody to. They would have to come with their idea and you'd say, yeah, that's okay or not okay.
We have both. So
Okay.
on our website, mainstartrust.com, we do have a list of special asset types that we do allow. But, if anybody has questions on that, we have our customer service department is well versed on what types of investments you can do, or if you question whether something is an option or, how to go about doing it, you can call our customer service team and they will help educate you on that. Like I said, again, kind of always that disclosure, we don't give advice on how to invest or what to invest in, but we can help educate you on what the rules are, kind of around what the IRS allows, as well as prohibited transactions involved in that.
I know a lot of people, Steve Lloyd definitely brags about, Roth IRAs and supersizing stuff, and how you can take an IRA and duplicate it, quadruple the returns on it by doing strategy with real estate. People are, maybe they get a house under contract for $1, and next, they get $1,000 check for that broker thing. And then all of a sudden their Roth IRA that they bought with $1 is now $1,000. And those kind of things. Are you able to do those kind of processes? And how fast can you, how long does it take? Because right now, if you're going to buy anything real estate related, it takes time to close on your house. How long does it take to buy it with your IRA?
Well, let's back up just a step, because there are additional steps with IRAs. It's not it's not going to be the fastest process, depending on where you're at in the scenario. You obviously have to have your account set up. You have to have it funded. So if you are doing a transfer from another institution, another IRA custodian, or you have a 401k and you're wanting to move money, that can take a little while. You've got both financial institutions processing paperwork and moving money. So you always want to kind of have that planned out, get your account established, make sure it's funded. And then for Mainstar, and every custodian does this a little bit differently, but Mainstar, we do have a form we call an asset information worksheet. Okay. So when you pick an investment, let's say a promissory note, you provide that note to us. You give us a draft of that note and you fill out this particular form. What we do is we make sure that note has all the terms that we require. We can see the interest rate, we know what the payable, what the payments are, and what the maturity date, and those, standard things. We also need to make sure that whoever is in charge of that, or, if it was a partnership, the managing members, whoever, and we have their contact information. We know, who to go to if we have questions. And also those companies have to, review our terms of this asset information worksheet and make sure they understand as custodian what our responsibilities are, because we do have some obligations. So, they need to fill that form out, send it in, and then we review that asset just to make sure it's feasible for us to hold, that they will provide us valuations, which are required. That can be a struggle sometimes depending on the investment. Things like they have to be able to re-register investments, or, for RMD purposes. There's a lot of variables that go into this. So that process can take a little while. Mainstar, what we usually say is 24 to 48 hours to have that asset reviewed on our books. And again, we are just making sure it's administratively feasible for us to hold, that all those requirements that we need to fulfill our obligation to the IRS, that asset company is understanding of that. So once that's reviewed on our books, again, this promissory note example, we would review the note, we'll set that up on our system. And then really at that point, the investor, the account holder is just going to fill out our purchase authorization and request funding. Again, there's some steps that are involved with that documentation that we would need. Then we usually try and have funding done within 24 to 48 hours as well. So we try and turn it around just as quickly as we can. But I think it is critical for investors to remember that there are some of these additional steps that need to be taken in advance, establishing the account, funding the account, and making sure that your custodian can hold that type of investment. Mainstar, we specialize in the alternative world, but some custodians don't, or they may be less familiar with, certain types of investments and more familiar with real estate in particular. So you kind of got to find the right fit for you as an investor.
So for example, if somebody wanted to invest in, say, a note fund, one that has been newly established but has a very experienced known investor behind it, what kind of documentation would you need for that person from the fund?
In that scenario, or you're just to clarify, is that note fund, is it a partnership, a limited liability company, or is it we would actually have ownership in the promissory note?
In that case, it's an LLP.
Okay. So in those situations, we really just need, whatever formation documents you would have formed. So you would submit the asset information worksheet along with either the memorandum, operating agreement, subscription documents, whatever documents you have as that business unit. That's what we would need up front for that initial review process. And then really when you go to purchase the investment, again, our purchase authorization, and then whatever subscription documents you might require from the asset side.
So let's make sure we're clear on one thing too.
Yeah.
You guys won't say a deal is a good deal or not, nor would you guys give an opinion if the deal has a disqualified participant. Would that be accurate?
We do not do any due diligence on the asset. In conversations, if we recognize something as being a prohibited transaction, yes, we will point it out to you. We want to do full disclosure on that up front. I had a situation actually just yesterday where an investor wanted to create a brand new promissory note. And she says, I'm lending it to my LLC. And how's that going to work? Because this is your LLC. She would be considered a prohibited person. She was wanting to do a franchise, and she wanted to use her 401k money and fund a promissory note to her personal business to open this franchise. So we quickly kind of nipped that in the bud. I apologize. You need to refresh yourself with prohibited transactions. But her as the IRA owner is a disqualified person. So we, like I said, we always, if we recognize something, you tell us those tidbits, we're going to point them out to you and refer you back to the IRS code, just so you can read it as we are familiar with it. And make sure you know what you can and can't do.
Gotcha. So, you guys don't do due diligence for them, right? But what you do is the accounting for the asset. You actually, the IRA is set up, and it's not inside their personal name, it's inside the entity's company, right? And that IRA you can't pay for any expenses nor work on any part of that asset regarding notes, right? Typically rentals is paintbrush and all that good stuff. But with notes, you can't self-service because you can't add an advantage to that note. Is that correct?
That's correct. Yeah, you can't benefit from it. Self-service, you can't hire yourself as the general contractor. The IRS is focused on, this is retirement money. And it's being set away for retirement money. So they feel that, you as benefiting from, maybe being the self-contractor, you're wreaking a benefit before that retirement age. So that is where they get into that. You can't work on it. You can't have your son or daughter work on it. You have linear descendants, your parents, So it's really important that people kind of do their homework before they just jump in full force on an IRA, because there are some really important things to consider as far as what your intentions are and who's involved. Even as things like having your son's construction business do it. That's still a prohibited business, because your son owns that business. So it is important because the tax consequences are huge if you do have a prohibited transaction, and it would disqualify the IRA. So it's number one thing to think about.
But you could go into a deal with your son if you're 50% and they're 50%, correct?
Yeah. Yep. You can do joint ventures, partnerships. We do it quite frequently, and it is a way to leverage more money. So maybe a husband, wife, husband, son, daughter, they can partner like accounts. You can use you and your son's traditional IRAs, and maybe your wife has a Roth, and then maybe you've got some personal money. So especially in the note world, you can pool that money together. What is most important about that is that the titling is accurate. We would be looking to make sure, everybody, are they 25% owners or what? And then as interest and payments come back, those have to be divvied out proportionately back to the owners. Gotcha. So you as if you had it in both your IRA and personally, you can't take your IRA's money and use it. You got to pay the IRA back. Gotcha. Same with expenses, and expenses really happens more on the real estate side. If you are taking direct title to property, it is critical that any expenses and income flows through the IRA.
Gotcha.
So you mentioned there a minute ago about the tax consequences being huge. What does that mean? Like, we're not talking about a slap on the wrist. What are the consequences?
Yeah. I will have to double check, but I believe it's 50% penalty, and it disqualifies the IRA from the beginning of the year. So that whole amount of the IRA would be shown as a distribution to you on a 1099 tax. So
you don't lose the entire IRA. You just lose that year?
No, you would lose the entire IRA. It just happens that particular year.
Yeah.
Yeah.
So I learned in one of the conferences we went to a couple years ago, and I backed up real quick because I didn't realize this. And for those who are watching, I'll give you a little tidbit. I had been partnered personally with another one of my partners on a couple deals. And then I took my IRA and said, let's keep going. And I joint venture with them for my IRA with them on a deal. Come to find out, sitting with Jeff Watson about some stuff, and realize that person, because we were 50% personally, that person is now a disqualified participant. And I couldn't do a joint venture in my IRA because of the fact that we are personally connected 50-50 on a deal. So for those who don't know, the disqualified participant, most people think it's up and down. There are other features like your wife and stuff like that. But yeah, I was amazed when I found out that I was 50-50 over here. I could not be any 10%, 20%, or 50%, or anything with my IRA because I was 50%. It was interesting.
Right. Yeah, absolutely. I mean, like I said, it is really important for people to do their homework and do their own due diligence, not only on the investments but on what type of account they're opening and what the rules and regulations are that the IRS has established.
Yeah. With that said, I know one of the things that we kind of work on a lot is, the process of buying a note with the IRA. So once we establish the fact that we want to buy this asset with this note with our asset, we contact you, go through all the paperwork, right? And then everything that goes through that asset has to go through the custodian. All payments, all the income has to go to the custodian, right? All the paperwork signed. I can initial, but then you guys have to actually sign the purchase sale agreement.
Right.
Yeah.
That's correct. Yep. And it's important, I mentioned it earlier, that we have to have title to that. So even if it's secured by real estate, that does have to be titled in the IRA's name. So the note may be drawn or the partnership may be drawn. And if it is secured, like I said, by that property, more in the note situation, then Mainstar would be listed on the actual deed, or if we were holding direct title to the in more of your limited partnership or LLP situation, that partnership is going to hold title, and your IRA would just be listed as a member of that. So that is a little bit different.
So for those buying notes with your IRA or using somebody else's IRA to buy notes, tip, just from experiences, tell the seller that it's coming from an IRA.
Yes.
Because if you say, okay, we're going to close on Wednesday, IRAs, like we're saying, it takes an extra couple of days at least. And so just make sure everybody's aware. You don't want to tick anyone off. You don't want to lose this deal because you said you were going to close Wednesday, and then it takes 2 or 3 days for the funding to come through. So just make sure that the seller's aware. Usually that's not a problem.
Yeah.
But just make sure that that's being said out loud.
They understand if you're on the process and the seller knows you're going through a custodian, that you can't control it, right? Who knows? Carmen may get sick and she's supposed to sign that day and has to get passed on. So things happen with that, right? So it's something that you just have to establish with the seller when you're going through the process. And if you can tell them the sooner the better. Hey, listen, FYI, I'll be financing my IRA, so closing may be kind of delayed a day or so. Hopefully, we'll be on time. Give them up to date.
Just let them know.
Now, Carmen, I know with notes, all documentation mods, your servicing agreement, all the assignments have to have on the title of the IRA. When the note is the collateral file, is that something that you guys typically want to hold on to? How do you handle the collateral file for documentation stuff?
We don't require to hold on to it. We often have note servicers that are involved, and we kind of let them manage a lot of that. We like to have obviously a copy of the signed completed note, but moving past that, we don't get too involved in all the fine paperwork and everything involved. It's more of than just making sure that payments are being applied back to the IRA, and that those are coming to us, ACH check, however, we have a variety of ways that everything comes back. So like I said, I mean, really our big thing is making sure we have a copy of the signed note, including any deed or, copy of the security and deeding. But we don't require to hold it physically or anything like that.
That's awesome.
That's good.
And, I think some of the stuff that we worried about with IRAs is the prohibited people and the prohibited transactions. Do you guys hold any kind of trainings or webinars or, additional information to help investors to know, hey, listen, I'm curious because, what it seems to me is every time I talk to someone who does IRA investing, they have a new strategy that I've never heard of before. It's so cool. Like, whoa, right? It went from, I didn't know anything about this thing to, you can do this with it? The wholesale paper, buy a product for $1 and get it out. I'm like, that's crazy, but it happens.
Yeah.
Do you guys hold any kind of trainings or education?
So we don't currently have any webinars or online training or anything like that at the moment. That's another process, as you guys know. We really focus more on these types of situations where we can meet with you guys, really the asset sponsors, and go through, with your customers and what the options are. As a custodian, though, we do have a great customer service team that you are more than welcome to call and kind of discuss different options. And again, they can help with the educational side of it. That happens daily. We have people, I heard about something, how do I do that? And so we take those phone calls daily, just kind of help you out and maybe redirect you to some of that educational stuff. Our website does have quite a bit, of information out there, and we're always adding to and enhancing that. So, if nothing else, call us send me an email, whatever, and we'll help out however we can.
Cool.
Great. That education part is so important because, like you said at the beginning, Dave, so many people don't know about IRAs in general.
Yeah.
So just learning about an IRA for the first time, there's some education that goes behind that. And then on top of that is, okay, so then what can I invest in and what can I not? And so that education part is pretty key.
And when you learn this stuff, you can walk around a RIA with people who have money, landlords, and you start talking like, whoa, 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 what do you mean by what you're doing? And it's like, well, I'm asset strong. I don't have any money ready to go. It's like, well, do you have IRA money? And just by saying that and people realizing that you're talking about something they never heard of before, they're pretty impressed with that conversation. They're like, whoa, this person actually knows something I don't know. And even if they've had more experience years, this new angle was something they're attracted to. So they'll talk to you for a little while and hear what you have to say, and notes the same thing. For the ongoing process of payment, what is a typical cost to have these assets managed and as a custodian? Is it expensive, thousands of dollars a year? And what are the costs usually held?
So, a lot of custodians' fee structures vary. Some choose to even do their fee structures on a market value based. We don't do that. Our opinion is you want your retirement balance to grow. And so we don't want to penalize you for just constantly charging more as your account value increases. So we charge a flat fee, flat annual fee. And then depending on what type of investments that you hold in the account, there is an annual special asset fee for that. And then really past that, it's just transaction based. So as you purchase or sell investments, there's a fee associated with that. Or if you were to need to take distributions out of the account, maybe to satisfy a required distribution, there's minimal fees associated with issuing a check to you. So really, the fee structure is pretty simple. The flat annual fee is $110 for a traditional or Roth account. And then to hold like a limited partnership, limited liability company, something like that, you're looking at an additional $36 special asset fee on an annual basis. And then like I said, the transaction fees, $25 to purchase into something. If you're looking at promissory notes where you're actually drafting a note, the fee structure is a little bit higher. And additionally, if you are looking to hold direct title into real estate, that fee structure is also a little bit higher as well. So pretty feasible, couple $100 to kind of get you going. And we do have a minimal special setup fee that you would, once you establish an account with us, of $25. So I don't know what all that added back up to, but it is pretty minimal on an annual basis.
And I presume you guys are aware of you guys are able to do a backdoor Roth for those who have an income higher than the threshold for Roth, of converting a traditional over to a Roth every year and getting that Roth feature. And I'm sure that happened a lot with a lot of clientele. So those who may be at a higher income, you can still do the Roth through what they call the backdoor Roth and get that bonus money getting it started, right? And then traditional versus Roth plays the game of what you choose to do. Obviously, you can contribute traditional, but you can contribute Roth. Do you guys get involved with the idea of, managing the asset bills and structure, or is everything from the client to you and you just pay it out? Is that how it typically, or do bills be sent directly to you guys?
The only situation where billing would be sent to us would be in the situation where they're holding direct title to that property. Because in that situation, any, real estate taxes, all those expenses, if you have someone mowing your lawn, that all has to be paid by the IRA. But in the situation where there's a partnership or a limited liability company that you're investing into, that partnership, that company is handling all the ins and outs of that daily operation and those expenses. So Mainstar's not involved with that process. We're really involved with the funding that we would, issue that purchase money into. And then if there were, interest payments, dividend payments, that money comes back and we apply that back into your account.
That's awesome.
So even with the fees and everything else, like we're talking, if you get a performing note, for example, I mean, you're talking about less than 1 month of monthly payment from the borrower paying for your IRA. That's a pretty good deal. That's a pretty good deal.
So it's amazing with all this going on with real estate the way it is right now. IRA investing, I'm seeing in the next probably 24 months is going to be huge. Inflation going up, everything else, but everyone's been consuming to the Roth IRA or traditional IRA and throughout this time, and they have a lump sum of money. For investors out there looking to get into this space who may have some money, do you recommend IRA investing to real estate as a ploy, or is that more of an advanced strategy, would you say?
It's a little bit of both. We don't recommend one way or the other. But when those investors do call, we need to make sure that you understand that if you are investing in that real estate, that it is more advanced and you need to be more aware, prohibited transactions, things like that, because they often think, I can go and change the locks on the house, or I can shop for, new living room furniture if they're using it for a vacation rental house or something like that. And you can't, that's where it becomes more risky, because you can be more close to those prohibited transactions.
Right.
So that's usually what we remind people of, and your guys' situation where investors are really just, investing in your partnership or your company. There's less risk of them, running into those prohibited transactions.
Mm-hmm.
So that is a little bit of a safer model for people.
The guys, don't move into the house for a week and hang out there, because you could lose your entire IRA by doing this.
Yeah.
It's not a smart move.
Or people often think they can invest in a condo and, go vacation there one week of the month or whatever. And you can't, that sounds great, but until you distribute that property to you at retirement age, you can't take that benefit from it.
Yeah. Oh, what a shame.
That is interesting. And good to know. You've got to know these different things, because
eventually, Carmen, you got to get IRA up in Canada, because Nathan being in Canada, they don't have an option for IRA.
We've got a different one. Ours is called a tax-free savings account. It's very, very similar. The downside with the TFSA is that we don't have as many options of what we can invest into. I can self-direct it, but I have to buy something that's publicly traded. So I can't buy real estate because that's not publicly traded. So it's limited. But on the other hand, I can withdraw at any time without penalty. Yeah. So that's a pretty huge advantage, but at the same time, I can only do publicly traded stuff. So I'm basically limited to stocks and things like that. So
we had a question from Goodwin. The question was regarding recategorizing traditional IRA money to Roth, thus incurring taxes. Are those funds considered W-2 or earned income as well? It's a CPA question, but Carmen, are you able to?
Yeah, as custodian, what we would actually do is we report that as on a 1099 tax form. Would show as a distribution out as earned income.
Yeah. What I typically do, if you have some money that we're just putting into a traditional, is change it over the next day, so that you can quickly go from a traditional to a Roth, unless you have a bunch of money sitting there. Just don't let it gain any kind of income that you're paying taxes on it. But if you do that annual year of $6,500 and then just convert it over the next day, actually I do it at the same time, but they convert it over the following day. That's the strategy of doing it, right? But good way. Hopefully we answer that question.
So Carmen, we're always curious about the experts we have on here and what's coming up. What are some things that we see coming up? Dave mentioned a few minutes ago about IRA usage going up in the future. Is that something that you guys foresee, or do you have any thoughts on that?
Absolutely. Yeah, we do. it just really depends on the investors. The IRS is kind of always adapting and changing the rules and regulations, so you kind of got to be savvy with what changes are being made by them, let alone what's available in the industry. A lot of people are really kind of getting into some of the Bitcoin stuff, and so we're adapting and exposing, getting exposure to that. It's always changing, and right now real estate has been a popular item. Promissory notes, corporations are always a popular item. We don't do near as much investing into the bonds and stocks as we used to, but we're not necessarily geared towards that. We do it, we allow it, but our focus is really on the alternative investments. So, it's always changing. You just never know what people are going to be interested in.
Are you seeing from the clientele you've had, are you hearing any kind of whispers of what their thoughts are or what their strategies are? And are you guys seeing a dip or increase at all right now in self-directed IRA with real estate at all? Or where do you guys see any of that kind of stuff going on?
Any trends that you see coming up or that have been happening?
We don't necessarily have a lot of those conversations with our investors.
Right.
When they come to us, they're ready to make that move on what they're wanting to go forward with. So I unfortunately don't really have a great answer to that.
Okay.
But real estate has been a hot item. And like I said, Bitcoin, we always have demand. People are anxious to do that. I think, it's the popular thing. Otherwise, the reliable things that we always see day in and day out are those notes and investing in partnerships. So
Yeah.
Just curious, do you keep stats on what people are investing in?
Sort of.
Okay.
Limited liability companies and promissory notes are our number 1 and 2 items that we see activity in.
So just to clarify that, what people may not know is you can actually start a company with your IRA and fund the entire company. I think they call it a Rob, right? You could fund the entire company with Roth money or with traditional money. So if you want to start any kind of business, and you completely could be funded by IRA money, profits earned, all that stuff goes from the business, which is pretty cool. Partner with your kid or whatever, they put in some money, you guys start a business together, you can do that kind of stuff, which is really, really fun. And it's a nice way to get the business started with your retirement money and have motivation for it.
Right. Absolutely. Yeah. What you're referring to is we hear it as checkbook control LLCs.
Mm-hmm.
Those are extremely common where people are using their retirement money. They're forming that LLC, using that retirement money. They can have multiple members of that LLC, like you said, maybe a father-son situation, and maybe they are flipping houses, but they're doing that all within that LLC. So as custodian, there are some different rules and regulations about that, but we just see the front end where we're funding the LLC, and then that gives them that control. Where they have that checkbook control to invest into product or investments, real estate, whatever it may be. And kind of the same thing, when there's profit from that, it has to come back to the IRA, or if they were to liquidate that fund, it has to come back to the IRA. And that's where some people often, mess up a little, where they may take a distribution and put it in their personal checking account or something. And that's where that fine line is. So that is, again, some of that more advanced investing where people need to be extremely cautious and aware of what the rules and regulations are.
That's really interesting.
Do you guys handle checkbook IRA, or is that something that the investor has to learn and build themselves?
So we allow checkbook LLCs to be in the account. We are not any part of the formation of the LLC, nor do we have control over the checkbook. That's what the managing member of that LLC would be responsible for. It is, again, something that investors need to understand what the IRS's opinion of them are, and we do require an extra kind of a legal, that they understand that it's not a prohibited transaction. So if that is something someone's interested in doing, give us a call and we can talk about that a little bit more of what the requirements are and kind of, what role we take or don't take. But it like I said, it's that extra, you got to think about, what the prohibited transactions are. And usually we recommend people to make sure they seek legal or tax advice on the formation of that.
Yeah, awesome. Well, Carmen, I think the information here has been valuable. Your knowledge is impeccable. I give God credit. What we can do is, if anyone, let me bring up the link for anyone for the feed and whatnot. If anyone wants to get, Carmen information, or if they want to, find more information, get in contact, I'm going to give you guys a link to a form. I'll just have you fill it out, and then we'll send it right to Carmen, and you can go right from there. And, have any questions, concerns, issues, let me post it now. 1 second. Feel free to fill the form out. I'll send it to Carmen. We can reach out to you guys. We have some information on their servicing, their costs and stuff. So dive into it. Having a flat fee maybe is big in the beginning, but as you grow your account, that flat fee makes a lot more sense. Because as you grow, you're going to hit more and more with your fee going up. It's a short-term gain the other way, but this is a long-term play. Retirement's, years away, hopefully, for some of you guys. I know for, myself, I'm only 22 years old, so I have many years, right? So, Carmen, it's been awesome to have you on here. I appreciate giving your knowledge and sharing some of the basics as well as some of the advanced information, and share some of the just personal knowledge you have in attractionness. So again, thank you very much for joining us.
Yeah,
and,
thank you. That was really good.
If you have any further questions, guys, feel free to reach out to Carmen, reach out to us, and we'll go from there.